Welcome to the 10th anniversary of REIMAGINE 2021. Presented by Mousebelt. Coming up next.
Hello, everyone, and welcome back to REIMAGINE 2021 version 10. So this is our 10th edition anniversary event. We've been doing these virtual conference events for the past year now, bringing you the latest in founders, the latest in innovation, and just the daily news and exciting things that are happening out there. I'm your host, Roshan Mirajkar, and I'm very excited to bring you a new guest here at REIMAGINE today. With me here today, I have Lex Sokolin, who's the CMO and global fintech lead at ConsenSys. Lex, welcome to the REIMAGINE show. And I'm very interested, just to get started, tell us a little bit about how you actually got into the industry.
So wonderful to be on here, and things in crypto move fast, and so have some of my titles and things that I do at ConsenSys. So as you mentioned, I co-lead the fintech product development arm called Codify, and if you've used swaps on MetaMask, you've touched a product that we built. And then I'm also currently the head economist for the firm, leading efforts around kind of token design and token launch and so on. So a little bit of a different hat. In terms of sort of my path towards crypto and blockchain-based systems, for me, there's a couple of different threads. I think the simplest one is just pointing out the Ethereum moment. So I had a career on Wall Street, but fairly early on, kind of took the jump to being an entrepreneur, and specifically in financial technology, and thinking about, how do you put financial products into the phone? And so in 2009, I started a robo-advisor and kind of spent a good part of the next decade building that out. And so in many ways, although I had a little bit of Bitcoin exposure early on, I wasn't kind of as interested in macro investing, and so I didn't get the bug then. But during the 2016 period, give or take, when Ethereum started to tell its story and kind of really come out as a computational platform that was able to do economic and financial things, it was very compelling for me. At the time, I was leading an equity research practice focused on fintech and large public companies. And one of my clients was a publicly traded exchange that wanted to understand innovation in its space. And ICOs had just started to kind of pop up in the early days. And so there was this gigantic company which is in the business of listing equities and companies and facilitating trading, that just didn't know anything at all about what the frontier was doing, and how essentially self-governing robots were able to generate financial software infrastructure on their own. And so for me, this was totally fascinating, like this wedge that Ethereum and smart contracts and computational blockchains put in place for a giant part of the economy and the software that powers those industries, and there are hundreds of billions of dollars in enterprise value of just companies that do core banking software or payment rails or portfolio management software. And so it's, for me, that was a straight line as to transformation. And then, the deeper I got about the capabilities of building programs that are decentralized and the attributes that they power, the types of objects and assets that they power, the more obvious it became to me that this is a global shift, that it's going to include billions of people, that it's going to include large parts of our GDP, and that it's a strictly better way of having an internet. It's one that gives dignity back to the user through self-sovereignty, through privacy, through the ability to hold your own assets. And so I'd say that was kind of the core piece for me that got me into it.
Yeah, love your journey, and it's interesting that you kind of have experience with interfacing with these enterprises and also educating them at various levels. I guess I'm the first to interview you after the launch of ETH 2.0. So, what effect do you think this will have on the industry? Is it going to benefit, retailers more, or do you think institutions will start to see Ethereum as deflationary, maybe, and use it in a different way?
So I would love to have to be able to claim that ETH2 launched. We're getting there, and of course we have lots of scalability in terms of side chains that are now enabled, like Polygon and various scaling solutions like Arbitrum and Optimism coming around the corner. And so, from the ConsenSys point of view, we do a lot of work of plugging in those scaling solutions into your wallet, like MetaMask, or into developer tools like Infura, and of course also working on ETH2 to make sure that the beacon chain functions and that the merge happens. And so I do think that a transition to proof of stake will be net positive for Ethereum, at the least in the narrative around energy. And so even though I think it's pretty controversial, like I don't think it's entirely clear or fair to say that energy consumption is destructive as it relates to blockchain systems, but it will at least take that conversation off the table when it relates to Ethereum. But we haven't gotten there yet. What we did get yesterday was an upgrade that is meant to lay some initial groundwork for ETH2, but also, and sort of the loudest thing that people talk about is it dampens the volatility on fees that you pay to use the computational machine of Ethereum. And so, for folks down the rabbit hole, they know that there is it's not free to do transactions in a place where everybody wants to do transactions. And so sometimes you see very intense spikes with people rushing to compete for block space. And so there's a lot of volatility in gas consumption. And so the EIP 1559 was meant to kind of do two things. One is introduce a mechanism to dampen that volatility so fees are more predictable. So in the user experience, like in MetaMask, it's going to be a lot easier to know what you're going to pay and how your transaction is going to be prioritized. And then number two, part of that fee, is split into a base and a tip, and a bunch of it is burnt. And that creates a deflationary pressure on the overall supply of ETH. Now, that doesn't mean all of ETH is deflationary. It just means that there's both a plus and a minus, and so the deflation helps holders of the token. So it gives some of the value from sort of the fee mechanisms back to token holders, and kind of changes the incentives a little bit. So that was the intent behind that upgrade.
Well said, and thanks for explaining that. As you said, there's tons of misconceptions, and people out there are still trying to understand. And I think just in general, people are trying to understand, the differences between the DeFi and crypto world and the traditional world. So can you explain to us, like, what are some of the structural differences between DeFi and things like trade fi and CeFi?
Sure. This is a you can have a master course on this topic alone. I think there's nothing special about finance. Finance is just an industry like any other industry. And there's really nothing special about industries or economies either. They are just things that people do. and do in a repeated pattern relative to each other. So there are these social constructs for people in a society or in a civilization to interact, organize, make things, right? If you think about humanity as the sort of like super organism or this hive, like what are the patterns by which we do things? And this is your economy. And so the role of finance, about 10 to 20% of an economy, the role of finance is to is really to help people do more, or help businesses do more. And so you get into things like you need a loan so you can buy a house, or you need to offer out some equity so you can finance the growth of your company, um, or you need to build a portfolio for retirement, right? Like the role of finance is to um, take the ingredients of risk, of capital, and make things that people and participants in the economy need. And so that doesn't change. What does change is how that is built, how that thing is. And so you've got manufacturers of financial products. And so you can think of a bank account or a brokerage account or an asset management account, uh, a partnership interest in a hedge fund. And then you can think about distributors, so people that sell the stuff. So it's your bank branch and your financial advisor and so on and so forth. And so, traditional finance has been digitizing in both of these, but the part that's been kind of the most transformed is distribution. So everything's in the phone now, right? You've got Robinhood and Revolut and Chime and Coinbase and so on and so forth. But we haven't had like a major paradigm shift yet in manufacturing. And in large part, this is what decentralized finance brings to us. It gives us a computational platform which manufactures digital scarcity, which manufactures trust, which is open sourced, which can be used across different asset classes, whether it's investments or banking or payments, is global, and is accessible to anybody with an internet connection and the desire to be in a Discord channel. And so the ability to make stuff, to make a savings product, or to make some digital objects with value in it, that's the core kind of paradigm shift. And so now we've got fintech for distribution, we've got DeFi and crypto-based, blockchain-based systems for being the architecture on which all this stuff sits, and we've just had unbelievable and very quick innovation, how do I put it? Technical and software innovation around bringing the things that traditional finance has been doing and re-engineering them so that they run on these distributed, decentralized systems. And so this is a much more efficient version of the world. It's one that is much more directly connected to people, with fewer steps in the value chain, fewer intermediaries, which results in better pricing, and in the long run, better financial products. And so, there's not like this is not a completely different reimagination of what people need. People need to pay, save, invest, lend, borrow, and so on. But it is finally a modern architecture for the things that, I would say for the next 30, 50, 100 years of financial services, we're now seeing the actual architecture that can support the type of world we're moving towards to.
I mean, I want to live in that world, and I think a lot of people in crypto already do. I think the way that you laid it out is pretty exciting and well said. But I also think a lot of people get confused when comparing, the DeFi and crypto markets and the traditional economies. So, from your view, do you see the crypto and DeFi world in a separate economy? Or do you think, how are they both going to be interlaced and connected? You think it'll be more of a hybrid model, or do you think a lot of these traditional institutions will, shift over and not only use blockchain but participate in the variety of ways like staking and stuff like that.
Yeah, it's really wonderful to be a maximalist, right? Because you can just pick a flag and then like wave it really hard and sort of be impervious to evidence and nuance. But there, if you go looking for it, there's definitely a lot of nuance. So there's two bookends I can describe that I think will help, and I'll do that in a second. I mean, the main point is that 2021 has an order of magnitude higher institutional adoption than 2017, 2018. We've just seen multi-billion-dollar checks go into some of the core crypto properties and new investing in both on-chain and off-chain projects, and so the investment now in 2021 is going to bear fruit in 2 years from now, right? So, like talking about these kind of super cycles in crypto, and so we see institutions enter and largely kind of, let's say, risk-seeking hedge funds that are managing 40, 50, 100, 200 billion of AUM of assets under management that are now placing bets both in the equity of companies as well as in the the tokens that are on chain that are liquid. So I guess to one point is it's already hybrid. We're all in this, so it's both the long tail of crypto participants, it's the early OGs that have stacked their bags and are buying $10 million punks, and it's also the traditional OGs that have got 20 billion to spend and are finally grokking, are finally understanding that this space is not about just internet money. This space is about the entire economy of the world going forward. And so I think that like the hybrid thing is good. It's just important to sort of hold on to our values and figure out, which things can't be compromised and which things have to be integrated. And so that's difficult. But okay, so the two bookends. I think the down case for me is sort of what happened if you look at payment rails. So for those people who enjoy paytech and geeking out around payment rails, you can think about you've got the cash economy. So there are people who will take cash and they'll have cash registers, and you push a button and a mechanical device opens up the cash register and you give people back cash, and that's a technology that's about 200 years old. And then you've got the swiping of the card. I mean, there's also checks, right? You can write a check. You can write a paper check and sign it and mail it. That's a thing if you live in New York and pay rent. And then you've got a technology that you swipe a debit card or a credit card, and that's an electronic rail for money movement. And then you've got contactless Apple Pay or Google Pay, which is yet another payment rail which encrypts certain information to access other things underneath. And then you've got WeChat or Alipay, where you can take a picture of a QR code and use the rails of the tech engine. And of course, now you've got the blockchain rails with the stable coins and so on. And so each one of those powers economic exchange. And they sort of exist, some exist parallel and some exist separate, right? So when you get into an Uber, you can't take your cash and shove it into your phone to pay the Uber driver. That's nonsense. You don't get to bring your antiquated cash into a digital economy intermediated by the phone. No, thank you. And so this, I think, is there's an analog here where nobody can put like physical cash into their computer screen in order to pay a MetaMask gas fee, and that makes sense. And so there you're kind of relying on a crypto native economy to grow on crypto native rails. And thankfully that's doing fantastically well with DeFi and NFTs, but and I would say that's the down case, right? The up case looks a lot more like what happened with music and media and the internet, which is that physically printed books, video cassettes and DVDs and CDs and physical representations of things that have been digitized are it's not that they're irrelevant, but it's that they're not the area of growth, nor are they really where future generations are investing their time. And so, I can also see a world where traditional finance maintains its importance and function, as a 50 or 100 trillion asset industry, or a set of assets, which is fantastic. All the financial assets in the world, and then the crypto assets start growing to, from where we are today, between 1 and 2 trillion to 50 trillion to 100 trillion to 500 trillion. And I think as an industry, we're just in the beginning of laying that groundwork.
Yeah, I mean, that's a great comparison. I think a lot of people are familiar, obviously, with the rise of Web 2.0 and how it impacted everyone's lives. But I think everyone's realizing now that there's some problems with that ownership control, and maybe they got too much control. But kind of going into what do you think is the future of commerce? Like, how much will it happen on chain, and how much will it be off chain? Just with traditional finance, like how much of that infrastructure will still stay, maybe?
It takes a long time for things to deprecate or to melt, so I guess I'm not really sure how to tie that together exactly, but Amazon, which now is barely 2 trillion, poor Amazon, is a mega cap, only has e-commerce in sight. Do we feel bad for Amazon only doing e-commerce? And the answer is, of course not. But let's say 15 years ago, you would look at e-commerce and you would say, this is 3% of retail. And then a year after, it would be 4% of retail. And a year after, it was 8% of retail. And then after COVID, it's something like 17% of all retail. Does it matter if Amazon and e-commerce are at 100% of retail? It does not. And similarly, I don't think for crypto, I don't think it matters to be 100% of anything. I think what matters is the space itself growing? What kind of entrants are coming in, and what are they doing? And so where we got to today is that, of course, there's the Ethereum chassis and the Web3 chassis of Polygon and Filecoin and sort of other adjacent protocols that connect into Ethereum. And then on top of that, we have the 70 billion in DeFi assets, give or take, and then over 100 billion in cash and equivalents and stable coins. And so this on its own is growing as a financial infrastructure. And now we're also building out the creative and media industries with NFTs. And so you have people who are not there to structure notes and lend and yield farm, but to express their identity and to belong to different tribes, and be creative and like make new types of art and music and so on. And that's brought a huge amount of people in as well, whether it's the art markets or the sports markets and so on. And what I expect to see is more and more industries being kind of folded into the Internet of Value, but it's not sort of it's not generic. It's not just like how the internet encompasses everything. Well, it's for the internet, it's about information, and for blockchains, it's about value. And so even for the where it comes to the media industry, what we're getting is the economic aspect of dealing with media integrated into blockchains. And so I think the economic aspect of everything, no matter what the subject matter is likely to end up kind of mediated by a computational blockchain at some point. But it's not a straight line, and you have to work with both individuals as well as enterprises, and like MetaMask Institutional, for example, has to help funds interact with an on-chain world in a way that they can't do on their own. And then on the enterprise side, like you still have to bring people along whether it's the CBDC projects where you're trying to persuade people and kind of make incremental change, or digital assets, but we're in it for the long game.
Yeah, definitely. I know you guys have built a suite of products that everyone is using now at the foundational level to develop and also interact with a lot of retail users. But I think something that everyone is excited about right now is talking about the metaverse, and also this play to earn model that's been very popular in crypto. Can you explain the impacts this will have on the space and how you think it's better or different than what could exist traditionally?
Yeah, the metaverse. So it's I'll try to slow myself down. I feel like I'm just machine gunning sort of like sci-fi terms at people, and I don't know how credible that becomes. But there are some fantastic thinkers about the metaverse that I recommend for folks to get going. Read Ready Player One for your sci-fi entry, and then James Burke's Outlier Ventures has a really great thesis about it on the decentralized side. And then Matthew Ball, who is sort of like a content industry insider, does a great job laying out what it looks like from the content perspective. And so, if you boil all of it down, the metaverse is this mystical combination of the progress that we've been making in augmented reality, virtual reality, video games, and then rendering engines for video games, digital avatars, things of that nature. So if you look, you can kind of start with you can start with Facebook and its Oculus effort, or Vive and HTC. You can look at things like VR chat. You can trace that back to Second Life and World of Warcraft and Fortnite and so on. You can look at Epic Games and the Unreal Engine and how that's used to make Star Wars movies. And so we're now in a world where the physical and the digital objects are sort of melting together in terms of quality, right? Like Google Earth can render a digital twin of the world that is accurate. And we're constantly scanning the world using photogrammetry, and in COVID, walking around real estate spaces using like VR renderings of these spaces and so on with companies like Matterport. So that's one aspect of it. It's like there's a place to be that is meaningful to be in, instead of staring 8 hours, 10 hours, 12 hours a day at a screen, at a light bulb, essentially, at a flat light bulb. There's a place to be that feels like a physical space you inhabit, but that is digital. And it's also an emotive space, and people feel belonging there. They feel emotion, they feel happiness, sadness, and so on. They create relationships. The second pillar of this is how do you have economics around these virtual environments? And I guess just as an aside, back to the virtual environment, like artificial intelligence and machine learning also goes into that, because it allows you to do machine vision and kind of scan the real world and incorporate it into the rendering. Okay, so the other side is underneath, like how do you recreate sort of the economic physics of the physical world, right? So to the extent that you and I want to have an exchange in the real world, and you give me, I don't know, I give you a cup of coffee and you give me $1 for it, right? That's an economic exchange. In Facebook's metaverse, that exchange just doesn't make any sense. Like there's no scarcity in the dollar, there's no scarcity in the object. And so the infrastructure underneath what a real metaverse has to be needs to be open source. And it needs to, it is a computational blockchain. And then it needs to do many things. So it needs to be able to process the world. It needs to compute it. It needs to store it. It needs to store the assets. You need to have identity for people. And so things that you see now around NFTs, and whether it's CryptoPunks at the very high end, all the way down to, like the many cat projects, the Gutter Gang, or, pick your poison of cartoon characters, all that stuff it points to people selecting an avatar for a video game that is inherently social and decentralized. So people are picking tribes through these visualizations. And you can imagine these avatars inhabiting the rendered world once that's more fully realized. And so, there are these attributes of Web3 that would underpin a place where people want to be with self-sovereignty and with dignity and with the ability to hold their own, to be able to hold their own money. So you can imagine like a MetaMask anchoring your assets in the metaverse, and then you need a blockchain that's functional for running software quickly, that can do things like Decentraland or crypto voxels, or we just did something with a sidechain called Palm for the Damien Hirst drop. So there's all sorts of things you need to actually do the economics and then be able to decentralize and render a world that people trust. And so, we're just getting kind of a flavor for this. I would say the last trend that to me feels like a core element of the metaverse is the sort of like meme stocks and social Twitter and financial TikTok, FinTok. And that is, the tribes, the avatar tribes, there's not yet a space for them to inhabit. So they inhabit Twitter or Reddit, and then they make communal investment decisions, right? Or they create DAOs and they purchase objects. And so I think governance of DAOs and the social spaces that emerge now and the social status that people are experimenting with, I think that piece tells us how these roving bands of tribes in the metaverse will behave. And again, it's super early on, but I think we've got a lot of the indications for what that world looks like.
It's probably the most exciting and best description of the metaverse I've heard. I love the way you broke it down, and it's going to require a lot of people to be more educated and understand how wallets and these different things work, because that's kind of your access and your ticket to the metaverse. So really excited about all those models, and I think just in general we've seen, because of COVID, a lot of business models get disrupted. A lot of people kind of switching over, using more crypto products. What do you think was the most significant development in 2021 so far related to fintech? Like, are there any specific use cases or industries you think people just won't go back to using the TradeFi version of it, so to speak?
Yeah, it's a hard question without just kind of listing the core things that we saw happen, in 2020, which is stablecoins first and foremost sort of landed, where there were still questions about the role of stablecoins and if they could hold value and so on, with Tether being the largest by far, to now having USDC and DAI and the rest, and there's the synthetic stablecoins, having many more cash equivalents that people can use. So if you going risk on, risk off, which assets to pick. And so that's a foundational piece. I think one thing to kind of think about as it relates to stablecoins is the difference between a payment mechanism and a money market fund. So there are different cash equivalents in the old world and in the new world. So if you've got a brokerage account, like a Schwab account, you're going to have cash in it, but it's not bank cash. It's not cash that you buy sandwiches with. It's a money market fund. And so similarly, I think we're still sort of in this back and forth about whether stablecoins are like a capital market sweep instrument, or if they're money to be used for payments. And I think that'll be litigated pretty heavily over the next couple of years. So I think, that was foundational as it relates to volatility. And then we've covered this a little bit, but yeah, DeFi is without question for me the main development of 2020. I would say NFTs and DAOs are 2021 and DeFi is 2020. And so within DeFi, it's the sort of the forward march of integrating the core financial instruments into software. And the way open source software works is that it only gets better and there's only more of it. Like there's not going to be less of it. It's not going to get worse. It's not going to become less functional. It's literally open source code for everybody to use and add to. And so, you know, we saw the evolution of automated market makers. We saw the kind of the margin lending from Compound and Aave, and so on and so forth, growing to millions of users and billions in assets. And I think that's a core development. And what we see kind of as a result from that is for financial institutions, and as well as for kind of other enterprises that are adjacent. In the past, it was, how can I use blockchain to solve a cost problem? You know, I have this reconciliation issue in my depository or in my exchange, and I'd like to sync information with my participants, and so take out 30% of my data cost, and therefore let's have this like private permission blockchain to fix that problem. And so as ConsenSys, we've done this in trade finance, we've done this in capital markets, in bonds, in private equity, you know, and the cost story is great, but what's more interesting is the revenue story. And so the fact that DeFi has now these engines that create value and that have tokens representing them means that there's alpha for institutional investors in the space, which means that finance firms now look at this space as a revenue generator for their clients rather than as like a back office upgrade. And the value proposition becomes much, much easier for more users and more capital to come into the space. And so I think there's multiple effects of what DeFi means, you know, and that's led to a whole bunch of custody businesses or faux custody businesses like Fireblocks, or the stuff we're doing with institutional and on the MetaMask side, and really kind of change the conversation. And then, you know, like to take on NFTs and DAOs, I think we've addressed NFTs with the Metaverse stuff, but the exploration around DAOs is really novel. And, you know, you can kind of think of token mechanisms and cryptoeconomics moving from being very strictly defined at the base layer protocol. Like, you need to have your math right for Bitcoin to work. And if your math is not right, the blocks won't connect. Like it just does nothing to, you know, like you can't have people govern block production block by block. You need a mechanism to coordinate them. But when you start building applications on top of a blockchain, the blockchain that functions mechanistically already, your applications don't have to be as strict. They don't have to be defined as rigorously. And then you can start to open up your objective functions, the things that you want to happen, to a much larger group of people. And so whether that's the decentralization of the core DeFi protocols, or whether it's just DAOs that have been put together to purchase art assets, there is fantastic experimentation of how do you coordinate and incentivize groups of people to, you know, to pursue their self-interest in a way that is a lot more flexible than the traditional corporate hierarchy structure. And so I think that's, you know, it's not a surprise to anybody in the space, but it's definitely something that is structurally interesting.
Definitely. It's like a completely permissionless or permission in some cases, but it's an opt-in system. And I love the decoupling of you know, some of these front ends being completely separated from just the protocol itself, and a lot of projects in the space only focusing on one thing. I find that pretty interesting. But yeah, tell us a little bit more about just at ConsenSys, what's been the biggest news or any interesting products you guys have been working on this year.
Yeah, so we've made a lot of moves. We had a very unique moment in the company's history in 2020, as did everybody. It was a tough moment, but we restructured the company and kind of refocused out of the venture studio model that we used to have in place, and kind of split into two entities. One is the ConsenSys Mesh, which continues to be like a portfolio management investment arm that is very much in the prior version of the world. From a perspective of taking multiple bets and kind of seeds. And then we've launched ConsenSys Software, which is really focused on building a business with some really powerful kind of flywheels. And so I'd say we focus on two core things with a third. The first is user enablement with MetaMask. And so getting people to actually use Web3 is super important. And so we've launched into MetaMask the ability to trade through swaps by leveraging the underlying decentralized exchanges, right? So we're connected into everybody and sending volume to the best place for that person to trade. We've launched institutional for MetaMask, which helps kind of more, let's not conservative, but funds with more obligations kind of navigate this world. And so that's on the user enablement side. And then on the developer enablement side, we help folks build and make it easier to build on Ethereum. And so, with Infura, we've launched Infura transactions, which makes it easier for folks to handle gas and interact with gas. And then we've also set up a bunch of projects around CBDCs with Quorum, and so Bank of Korea, with Reserve Bank of Australia, with the Hong Kong Monetary Authority, Bank of Thailand, France. So we're trying to push this along using a version of Ethereum again that this institutional side can use. And so we've tried to push things along both to make it easier to build and then easier to use. And I guess the last and some of the funnest stuff that we've done recently is launching Palm, which is a Ethereum variant, I'll put it that way, which is connected to mainnet Ethereum, which has bridges and is designed for NFTs. And so, if you think about companies building private chains for NFTs, we want to make sure that there's a bridge back to the open ecosystem of Ethereum. And so on Palm, we've, our largest release was with Damien Hirst and his project, The Currency. And so it was really cool to be involved with that and just, go from the launch process to the claiming process to the payment process and really put those pieces in place.
Yeah, thanks for that breakdown. And I guess the overall message is, whether you're new to the space or, been in the space a while, you're probably using a ConsenSys product somewhere along the way. And I think more people will in the future, whether they know it or not. And I think that'll be good for blockchain overall. And my last two questions to kind of end things off here. What makes you the most optimistic for the future right now?
Most optimistic for the future. Look, I try to separate out the price action of the capital markets and the value of the token and the noise of that from the kind of the operating fundamental progress that has been going on with the technology. And there's just there's like every single metric for Ethereum is going the right way. And when I say Ethereum, I don't mean, you know, just core Ethereum, but it's adjacent Web3 tooling and other networks. And so, you know, there's an answer to scalability, and there's going to be only more answers to scalability coming online. There's an answer to energy use, and it's going to take, you know, we're moving towards that, of course, but if you already want a different sort of if you want a different source of trust generation, you can use one of the plugged-in scaling solutions, which don't use proof of work, right? So we have an answer to energy use for those folks for whom it's important, that's a vector that is addressed. We see more and more decentralization. There are more validators than ever before. There are more users than ever before. There are more addresses than ever before. There are more transactions than ever before, and more value transacted. And then sort of my favorite metric is computation. So, you know, the number of contract calls that are executed on the Ethereum network. And end of the day, that's what matters, is how much software is this global computer really running. And so for me, you know, like the fundamentals of the network are super exciting, and we continue to flip into crypto new and novel industry sectors. I would have never sort of in my life would have expected to be like working on a project around Damien Hirst's art on blockchain to be distributed, you know, like, and certainly that's the same in the music world, and it's the same in the sports world. $500 million check into Sorare, like, it's just fantastic, the amount of excitement and operating progress that we have. Now, there's the macro environment, and there's a macro environment both for the traditional economy, right? Like the money printing and the asset inflation in the equity markets. And then there's the crypto macro environment, with sort of volatility and capital gains and where that's going. But I think for me, I don't focus on that. I focus on the things that people are building every day, and there's just more and more cool stuff all the time.
Hey, it's super exciting, you know, when you put a lot of work into things, and I'm sure you can relate to that more than a lot of people. And then you actually see, you know, the world using these products and benefiting from it. So I think that's awesome. And to kind of end things up, what is your, you know, some of your key pieces of advice for new people and maybe new entrepreneurs entering the space?
Yeah, and I think new entrepreneurs entering the space, as well as traditional institutions entering the space, because it can be disorienting when, you know, you're um, raised a certain way and spent a long time behaving a certain way, and then you enter a space populated by cartoon characters worth, you know, hundreds of millions of dollars, outbidding each other to buy 3D renderings of sort of like political criticism. So it can be disorienting, right? It definitely is. But if you, I think what I try to do when coming into a situation like that is figure out the promise of what's going on the terms of the thing that you're analyzing. So don't take your frame and say, I know how things are, and this is not formatted in the way that I like. You know, these people don't have Harvard degrees, or they didn't get to work at Andreessen, or whatever it is. Rather, say, what is it that they believe? How does it sort of project forward based on that internal logic? And is there anything in those outcomes that's appealing to me, that makes sense to me, that maybe I would have wanted, you know, if I had the chance to make it and build it. And I think when you take this industry on its own terms, despite the noise, there's a lot of stuff in there that's really aspirational and like truly aesthetic, like really beautiful in terms of what people are trying to bring to bear. And so I think, like, I guess one piece of advice is just to reduce the skepticism, because new clothes doesn't change sort of the underlying human nature of what is being accomplished here. And then the other piece of advice is learn Solidity at ConsenSys and download MetaMask and just dive in. You don't have to wait in line. Everything and everyone is open, and just start to make your mark.
Love that. Well said. Well, Lex, I had a great time diving into the metaverse and different other topics with you. And how can people connect with you and learn more about ConsenSys? Thanks for being at Reimagine.
Absolutely. So I'm easy to find, Lex Sokolin on Twitter or LinkedIn, and then consensus.net for some of the stuff about the products that I've talked about, metamask.io to grab a copy of MetaMask. And then I also write a FinTech DeFi newsletter at fintechblueprint.com. So always happy to help people along.
Wonderful. Yeah, thanks for being here today. And for the rest of you that are still tuned in, we have more interviews here at Reimagine. And check out our YouTube library. We've done over 500 interviews now. And yeah, thank you to our community, all of our great speakers and sponsors for allowing us to do this month after month. I'm your host, Roshan, and I'll let you all tune back into the show. Thank you.